For this week's first edition of Targets and Focus, where we discuss FX forecasts for some of the most traded currency pairs, I'm joined with Stephan Smith, founder of StephanSmithFX.com. The euro dollar is currently trading at 1.25, but I understand that you're expecting a pair to dip in the short term before picking up. How have you come to this conclusion, Stephan?
Well, there's a whole host of reasons why I got to that conclusion. One is that in the Eurozone, the unemployment rate for that area has been trending upward for some time. I believe as of March 2012, the unemployment rate topped over 10% in the Eurozone. And it's not showing any type of slowing down. So with that, I don't see the European Central Bank increasing rates in the near term. And that's not even mentioning the European debt crisis that's currently going on over there, which is waning on confidence in that area. So I do see the euro weakening sometime in the future, in the short term especially, probably around the 120 mark against the United States dollar, simply because of all of the negative fundamental economic data that's being released and the euro debt crisis that's going on right now.
What is your outlook for the euro-Swiss franc in the short, mid and long term?
Well, I'm very bearish against the euro, against almost every currency pair except the euro-Swiss franc, primarily because of what the Swiss National Bank said they would do because of the strengthening of their currency. The Swiss National Bank has enacted a floor of 120 against the euro currency because, as the Swiss franc continues to appreciate against the euro, it's actually hurting the Swiss economy. So because the Swiss National Bank set that floor of 120 against the euro, and they said that they would do almost anything that is in their power to make sure that floor is respected and maintained, I am actually holding a bullish view on the euro-Swiss franc, primarily because of the Swiss National Bank. As the eurozone debt crisis improves over the near term or over the long term, however long it takes, as it improves, I do see the euro strengthening against the euro-Swiss franc. And because of what the Swiss bank said, I don't see the euro weakening very much more against the Swiss franc, actually.
The next currency pair I would like to discuss is a US dollar Swiss franc. What are your predictions for this currency pair and why?
Well, within the next 1 to 3 months, I do see the US Swiss franc going up to 96 to 97, possibly parity in the short term. And in the long term, I see it going way higher than parity, primarily because the United States fundamental economic data is improving, no matter what other people may say. It's technically getting better. The unemployment rate is going down over the short term. Inflation is under control. I mean, I do know that the Federal Reserve has said that they won't raise interest rates anytime in 2013, but possibly in 2014. But as the fundamental economic data improves for the United States, I do see that it is a possibility that the Federal Reserve may raise rates earlier than what they initially said at 2014. I don't see the Swiss franc getting stronger, definitely not, because of the deflationary pressures they are experiencing. I believe it's negative 1% inflation over the month of April. So they are definitely experiencing deflationary pressures. And because of that, I don't see the Swiss National Bank raising rates anytime soon. Those are the reasons why I see the United States dollar strengthening versus the Swiss franc.
And finally, how do you think the Japanese yen will fare against the US dollar in the coming months and year?
The United States dollar versus the Japanese yen. The Japanese yen has proven itself to be a safe haven currency for many investors all around the world. And because of all the financial turmoil that was experienced in the United States and worldwide, the yen naturally became greatly overvalued. But like I said in my previous projections with this U.S. Swiss franc, as the United States economic data improves, I do see an overall strengthening of the United States dollar. And with that being said, with the euro debt crisis playing out, as it seems will improve with the euro debt crisis, I'm seeing a lot more investors all around the world moving their investment capital from Japanese yen to other currencies as things start getting better around the world. Over time, I'm going to say for maybe 1 to 3 months from now, I do see the United States dollar, Japanese yen going up to possibly 84 to 85, and even longer term, I see it going possibly to 90. As things improve in the United States and worldwide, there will be less need for safe haven currencies like the Japanese yen because things are getting better. So I definitely have a bullish perspective with the United States dollar, Japanese yen.
That's all for today's Targets in Focus, but the DukascopyTv team will be keeping you updated with all the latest market news, so do stay tuned.